Hey folks, Dan Frio here, the rate update. It was a great long weekend. I actually did work yesterday, but I didn't post a video because there was no mortgage rate updates. So I didn't post any mortgage rate updates. But if you were one of our clients, you might have heard from me, got an email from me, or one of my staff members. So thanks again for everybody. We hit the 10,000 mark last week. So thank you. Let me know what you think about the beard, to beard or not to beard. That's the question. And so what happened today and with mortgage rates? Well, stay tuned and find out. Two main areas that I want to go over today in the rate update, and I'll be quick today. I promise. I promise you I'll start trying to make these shorter and shorter and more to the point. But today you're going to see we have a pretty big red number. It's down 11. Not to worry, because there was a rollover or an adjustment, a 15-point adjustment at the beginning of the day to kind of balance out things month after month. That's done each month. And so basically we're like a +4. Let's just say we're at 0. So there's really nothing to report today in that area. Bond market was a little bit weak. Stock market was down about 150. So no big news there. The information that came out today that we monitor on a daily basis, and we monitor it pretty tightly because it's the biggest component, or the biggest fear for bonds is inflation. And inflation came in check, and I'll go over that with you in 1 second. But it was basically just a kind of humdrum day. We're flying through. We're back to capacity. I doubled up my processing staff, so we're getting out of the hole. We were about on a 60 to 90 day turn time. Any new loans coming in now. So if you're with us right now, you should be getting a clear to close any day now. And all new loans should be within 30 days or less. You should be in and out of the system, closed, and then you can start posting some good news about us. So like I said, in the past, we were out in some areas 90 days. But I didn't want to raise rates. I wanted to make sure that we had the best rates in town for you guys. So that's why we did what we did. So let's get on to what's happening right now in the markets. As you can see, the MBS market was down 11, but we had an adjustment this morning of -15 to balance out month after month, and that's what happens to basically bring things back to par, or just to readjust the numbers. So that being said, we basically had nothing happen today. So that's there. The economic calendar, like I said, was mostly inflationary, or inflation reports. And you can see here, consumer price index ex food and energy came in better than expected. And consumer price index as a whole was right in line. Tomorrow we have the PPI. This is the big number that the Federal Reserve watches. I don't see or anticipate anything there. Okay. Here's the fear in the market right now. And I told everybody this. Is forbearance. Okay, the forbearance is going to hurt the entire system in the delinquencies. And I'm attributing a lot of this delinquencies. Yes, everything was terrible. A lot of people should have taken advantage of refinancing. That would have bought them about a 2-month window in not having to make payments. And then you could have maybe put a little money in your pocket to kind of get out of the hole. But I get it. So no disrespect to anybody out there. I'm sure you're doing everything you can to get through this pandemic time. But we have late stage delinquencies starting to surge, and they're at a big level. Okay, so you're going to see a lot of clickbait coming on, and basically going to say, the housing market in 2021 is going to crash. Go back to my video, and I'll try to link it down below or tag it to this one, why I don't think that's going to happen. And so watch that video, and I give you my perspective of what the housing market's going to be. Are we going to have a pullback? Maybe a little bit. Why we're not going to have a crash? The loans are good loans. People are going to go back to work. This wasn't most people didn't lose their job. They got furloughed, postponed, the PPE, like the government programs to help people get payroll. I'm not saying that helped everybody, but it helped a lot of people. Also, the banks and everybody learned in the past, work with homeowners, don't let the whole system crash. So the forbearances, you're going to have other things like that come in play. Please, please, I'll beg you on this one. Try to do something else instead of a modification or a forbearance. Here's why. You're at the bank's mercy at that point. Okay, they now have all the cards and the power in their hands. So they can come back and say, this is a common situation that happened years ago. You went and you were in trouble, so you went and tried to get a modification. They either prolonged you forever and you just finally gave up, or they came back and said, you know what, we can cut your payments $200 a month. You want to do it? At that point, you're like, yeah. So you do it, they actually raise your rate, extend your term out to 40 years, and put the deficiency balance at the end. You just got hosed. Okay, you're going to pay so much interest and other things. It might have saved your house. God bless you. But what I'm saying is, please try any alternative you can to modifications and forbearances. That's what me and my team are here for. So all you need to do is reach out to us. I'm going to have all that information at the end here. So now I want to get on to what happened today with rates. Basically nothing, but let's go over what happened or what my rates are today. So I start out and we're going to go all the way to the top on a conventional or a conforming loan. It's the same word. I won't say it's the same meaning with a different word. Okay. So how you read this is it goes in here like this, and it says this is if you're looking to purchase your home or do what we call a rate and term. What that is it just takes your current balance and redoes it with a different term and a different rate. Okay, so that's basically what that means. Basically, you're just refinance your current balance. What cash out means is exactly what it says. You're looking to pull out cash. All right, so if you watched my video from last Friday, and I highly suggest you do that, we go over a rate sheet, and they are confusing. So that's why I put this together, and it's only a couple little blocks of what particular rates are. I'll call them cells. A cell on what a rate is in that particular cell. So let's break down this cell, okay? What I analyzed here is a $250,000 loan, all right? And I break it down as a purchase or rate and term up here, a 30-year fixed rate here, and then I put in your rate and your APR. And then down here, you'll notice I put in what the credit score is, and next to it I put in a percentage sign. What that is that 80% thing is what's called your loan to value. It's your loan divided by the value of your home. How you figure that out at? The simplest way for me to do this is say you need a $50,000 loan on a $100,000 property. 50 divided by 100 is 50%. So that in essence, that scenario would be a 50% loan to value. So I hope you get that part. Okay, so I broke down a couple cells. Right now, a 740 credit score, that is as good as you get. So that's why I basically say 740 and above. So you can have an 806 credit score, awesome. But it's not going to get you any better rate than if you were a 740 or 741. It is what it is. So the 740 credit score at 80% loan to value on a 30-year fixed rate and term or purchase. My rate today is 2.875. On the right side of that is your APR, 2.952. I'm not going to say the APR every time. You now see, you can follow me along here. However, if you have a 700 credit score, you can see the rate went up a little bit. It's 3.125. If you have a 660 credit score, you can see the rate went up even more, 4.125. That's not with me, that's all over the industry. What I'm trying to explain to everybody is the credit score has a huge impact on your mortgage rate. So if you come to me and say, Dan, my credit score is X and I need this and I'm looking for this, and I quote your rate and your credit score is lower, your rate's probably going to be higher. I'm not trying to bait and switch you or deceive you. I'm basing my information on the exact information you gave me. All right? So now let's scroll down a little bit. And now we have, if you're looking to cash out, meaning you're looking to pull out money. If you're looking to pull out money, again, credit score of 740. In this category, I changed my LTV to 75, just to throw some variables at you. At that, the rate on this 30-year term with a cash out would be 2.99%. Okay, now watch. 700 credit score, 3.375. 660 credit score, 4.625. Look at the difference in there. It's huge. So again, try to be as accurate as you can when you're giving me your information. If not, my information back to you, my answer back to you is going to be inaccurate. And I'm not trying to be inaccurate. I want to be as precise as I can. So now let's get to the 15-year rates. 15-year rates, we're going to go through the purchase and rate and term. 740 credit score at 80% loan to value, 2.375. Same thing at 700 credit score. And then the 660 goes to 2.5% rate. If you're looking to cash out on the 15-year term, conventional, 740 is 2.75, 700 2.875, and at 660, 3.125. Now we're going to get to our government loans. Those are FHA and VA. And FHA loans, and they will go to a what we call the loan to value of 96.5%. So if you're looking to buy a home and you have minimum down payment, we're going to most often look at FHA because it has a low down payment feature and it has fantastic rates. So a lot of times we'll put you into an FHA loan and you might say, I don't want an FHA loan. That's for bad credit, or that's for this or that. It's not. It's not. Many times, because you could see up here, just because your credit score is 660, you have a much higher rate, but 660 isn't a bad credit score. Okay? So if you're looking to do an FHA purchase or refinance, it's 96.5% loan to value, a 740 credit score, rate today is 2.75, 720, 2.75, 680, 2.75, and down to a 620, 3.75. That's still a fantastic rate. Remember, the conventional rates were in the 4s. Okay? My VA rates are the same, but the caveat here is you can go to 100% financing if you're buying a house or you're looking to pull out cash. And the rates are the same. 740 credit score is 275, goes all the way down to a 620 credit score at 3.75. We do offer the government programs, FHA and VA, down to a 600 right now. That's awesome. So now our cream of the creme of whatever you call that, our jumbos. Our jumbo rates, we are going to be known throughout the country here, I say within the next 6 months, as being the premier jumbo lender. Why? Our rates are off the charts. So let's go through this. This one is, if you're looking to purchase a house or do a rate and term, if you're looking for a jumbo program or loan, at a 780 credit score at 75% loan to value, the rate's 3% on a 30-year fixed, 3%. 760, the rate's 3.25. 740, 3.375. 720, 3.375. My jumbo rates are all over the board, under 3.5. Unheard of. So that's my rates for the day. So now let's get on to, Dan, I like what you're doing here, but how do I find you? Well, the best thing to do is go to my website. And this gives you all the ways to reach out to me and contact me and my team. Go to therateupdate.com. And all I need you to do is scroll down to the bottom. There's an 800 number right here. You can reach out to us. It's 844-775-LOAN. 5626 spells out loan. So it's 844-775-5626. Follow us on social media. Love to hear from you. Love to follow you. At least, answer some questions, chat, do whatever you want there. But one of the best ways most people reach out to us is they either apply. It's a real simple process. It is 100% secure. Or they email me. My name is Dan Frio. My email address is D for Dan, Frio, which is FRIO, at preferredrate.com. Okay, what I ask people to do is this. If you're in the process of a mortgage right now, send me what's called your loan estimate or your fee worksheet. It's a breakdown of what actually you're getting quoted from another lender. Okay, email that to me. I'm gonna write all over it in red pen on telling you what I can do. 90% of the time, I beat the competition in rates and fees. Sometimes I don't. Sometimes I don't beat them on anything, and I'll email you back saying, "God bless you, take it. I don't know how you did it, but you did a fantastic job. Take it." Most of the time, I'm getting back to you saying, "I got a lower rate and lower fees. Let's get this started." Okay. So that's what we do in most cases. If you haven't started the ball rolling, please look at all your options, especially if you're hitting a stage right now, you're like, we're just making it. We're just making ends meet. You know, the holiday seasons, believe it or not, are coming around the corner. You might need a little bit of extra money or a little bit of breathing room. That's where we might be able to help you. Maybe we look at refinancing you. We close in December. You miss your December and January payments. You start your new payments in February. That just gave you a complete breather during the holidays. And it probably, in most cases, rates are 1% lower now, almost across the board as where we were a year ago. So even if you refinanced or bought a house a year ago, your rate's probably going to be about 1% lower. Because of that, the math adds up that your payment would go down. Okay, it would be math. So that your payment would go down. Skip a month or two of payments. Give yourself some breathing room. So how do you do that? Again, go to the website, click the Apply Now button, give us a call or shoot me an email. I'd love to help. So when you send me your loan estimate, I want to go down this path for 1 second. Credit scores. Some people think they know their credit scores, others don't. Others are like, I don't know, this, that. Let's try to be as precise as we can. I have a sponsor of the show. It doesn't cost you a thing to do this. Go to creditscoresandmore.com. It's plural. Creditscoresandmore.com. Do step 1. It'll take you 3 minutes. It'll give you a score. No credit cards required, nothing. Create the account there. It'll give you a score. Send that to me and say, Dan, my score on that system that you recommended was X, and here's the rest of my information. That'll give me the most precise information to get back to you, because again, the better the information you give me, the better the quote I get back to you. So God bless. Take care. That's it for today. You're probably saying that was record time, Dan, and we know you can talk. So let me know what you think about the beard. Cut it or keep it. It's up to you guys. See you tomorrow. Bye-bye.